Good morning, everyone. Microphone check. Screen check. Is everything working? I had some issues yesterday, so it's... How's the microphone sound? Better than before? Worse than before? The same? Hopefully the same. Same? Okay. Good. That's better than anything else, so... Better than worse. Wonderful. All right. Anyway, welcome. Hopefully everyone is able to rest up, get ready for the day ahead, all that fun stuff. Of course, as always, on the left side of the screen there, make sure to read through the Live Trading Morning Prep PDF. Very important to go through and understand everything that is inside of there. I just wanted to take a second to give a quick shout out to our latest members that joined overnight and yesterday. Thank you so much for the support. I'm pumped to have you on the family here with SSFTG, whether it's on YouTube or the primary. If you aren't a member of SSFTG or you haven't joined as part of the YouTube side, check out the join button below the stream to gain access before the next private webinar, get access to the Discord chat, and of course, you get that awesome badge next to your name on here on YouTube that shows your support, and plus it just looks cool. If you're trying to figure out what it is exactly that we're doing here every day, look no further than the Day Trading Academy. You can find that over on SSFTG as well. Comes packed with 19 plus hours of material loaded for you, not including the hundreds of hours of charts and everything that we've got going on here on the YouTube side of thing every day. Please keep in mind, with that in mind, the YouTube broadcast does have between a 3 and 30 second delay, depending on where you're logging in from and your connection. If you do want to, excuse me, if you do want to level up to VIP status, though, you can enjoy exclusive permanent access to our non-delayed live analysis stream via Zoom, as well as monthly VIP webinars, VIP events, one-on-one scheduling access, all kinds of cool stuff. So whether you're here and you're totally new or you're a veteran over on the VIP stream, welcome. I'm glad to have you here with me today. Let's take a look at some charts, take a look at some news, see what's going on for today, see what's rocking and rolling on this Wednesday. So make sure to grab your morning DP levels. Those are posted for you this morning on the major 7 markets that we take a look at. I've got all those covered for you there. And my data's obviously messed up. Lovely. Hang on. That one should be that way. Okay. Why are all my indicators all... Just add that to the list for today. Anyway, looking at the Nasdaq on the bigger picture first, we have slid down pretty aggressively, right? We had a nice big push to the downside, breaking out of this sideways range, breaking out of this consolidation. And like we were talking about, when the market went inside this range, while we were pulling back, even before it really broke down, we actually saw the POC, like we were talking about yesterday, was a bit higher on the weighted side. Eventually, when this thing decides to show up. Come on now. There you go. So they actually shifted it down just a little bit. You can see where the POC was. The POC was hanging out there. When we broke a little bit lower, they created a lower POC and just got obliterated. We were talking yesterday as well on how we were seeing all of these different things just showcasing the amount of sell pressure that was coming in, and it just kept driving the market lower. Realistically, a lot of times markets will look for deviations on these moves when they're kind of hunting for something. And if we look at that, a straight deviation would put price support at around 13,342. We've got a ways to go until something like that happens. The alternative... Do I not have enough days of data? Really? Oh. Okay, let's go out to 90. Excuse me. There we go. All right. With this heavier pullback and this big wide drop, let's zoom out to a 60-minute chart real quick and see if we can kind of get a little bit of our, a little bit of our bearings on what's going on. There's the previous all-time highs. You can see they tried breaking above, couldn't get the job done. Now we've rolled back over. It's not to say that the buyers won't come back in, but we've been kind of given a heads up that the deeper pullback has been coming for quite a while now, given how long that undertow's been hanging out. We do finally have it. Big washout to the bottom, and that washout came down to the lows of the channel. Yes, it did overshoot it a little bit, but now we're back up inside. So if buyers are going to hold this, that's going to be the big point of interest that they're going to want to try to hang on to. Something along those lines. Get an inside pullback, maybe. We'll see. Switch back to the 15-minute. Over on the S&P, big V bottom here as well, but just a little bit of a different context here. The S&P did not make a new low. The Nasdaq got absolutely crushed, but the S&P, well, I mean, they broke the inside swings, but that's it. They didn't even break the major one over here. Nothing. So once again, the S&P demonstrating how much more bullish it is when compared to some of these other indexes like the Nasdaq. We've got another higher low. It looks like just a huge L5 with that nice pullback. Objective for L5 buyers, first off, is going to be to the opposing L2 to L1, and we're hovering around there now. If they can make it through there, then that's where you start projecting above. You get those negative L1 deviations, etc. That's when things start getting really interesting. We are opening up pretty far away from settlement already. I mean, we're way up here. We're already up +1. That's difficult. I mean, we've got this giant V bottom. What would be really nice is at the open, little snapback. That's where swing buyers are going to want to hang out. Not way up here. Of course, since that's the case, it probably won't pull back, but oh well, nothing we can do about that. Over on gold, we've got some nice sideways action. Still, no changes. We were talking about that trapping on the lows. They dipped underneath the base, held it on the inside, popped back up, and if we look across the highs, although pretty terribly, they did get a new high. Twice, actually, before rolling back down again. So this overall movement does demonstrate that buyers are at least trying to get some continuation to the upside. It's a bit weak and, all of that, but with this fresh new low, and the way that this is kind of structurally setting up, this does kind of begin a new shorter term story where we could kind of begin from here. And looking at the overall rotation, we had a nice move off of L3 that popped up into an L1, big giant overdrive rally, and they still all the way down. You can see it. And this adds a lot of context to being able to utilize this as a starting point. It didn't hold, but we still see buyers trying there. We still see buyers trying there. We still see buyers trying there. That one worked, right? So they're demonstrating that these levels are still being respected, even with how bad it looks. So once they made that new high, a lot of buyers are going to be looking to buy into the pullback. It kind of proved it. We got the L2, we got the rotation up, so they'll be looking to buy. And they just got it obliterated. The L1s, actually, if you look really, really close, there was that really nice bounce on L1. So the top of the L1, those buyers were rewarded at least a little bit, but after that, man, the bottom of it never even saw the light of day. The top of L2, nothing. The bottom of L2, nothing. L3 finally stopped it enough to get back into L2, and you can see they finally did come back and allow these traders out at break even as well. They took it, and the market rolled back over, but the ones who are still really stuck, right there, they haven't been given a chance. Everybody else, they've been given a chance. We even have an L4 bounce. Wow, look at that wick on L4. And they reconfirmed it down in the lows. So it's fairly obvious that swing buyers are in, and they're in cheap. They bought way, way down on the dip, and we might be able to see it on the volume now that we've gotten 2 bounces. Yep, we've got a bottom-weighted POC down in the 1776s. We've got accumulation volume now. I mean, everything is demonstrating that buyers are trying to get this to rotate back up off of this L5. Their upside objective, to let these buyers out. I don't know if they're going to be able to get up there, but that's where they're trying to go at least. Nice rotation up and nice break back above volume. The only other thing that we could potentially utilize aside from this phenomenal L4, which I am going to keep on there. Let's mark that up from there. We also, kind of curious, what did this last bear leg down do? Oh, great. Perfect timing for glitch data. Let's try to go to the next day, I guess. Ooh. Right ahead of that POC down at 67.8. So buyers are aggressively defending. If they're longs down there, they're eating it up like it's going out of style. Major upside objectives. Buyers are trying to get it to rotate up. It's a pretty nasty failure off the highs. We'll see if they can get it done. Over on crude oil, we've got some pretty good continuation to the upside. Still just driving higher now above 66 and never ending. The last time the market pulled back, it put in a high of around 65.30s, pulled back over the weekend, finally put in a bottom-weighted POC and ramped all the way up to the highs. I know it seems like we're incredibly far away from that area at 63.64, but if some news, I don't know, crude oil inventories, cough, cough, it's Wednesday, cough, cough, something happens to push this market down or spark a move to the downside, 63.64 is going to be the major zone of interest. And look at where that also lines up with. That's a negative 1.5 DP move. And we're already at the positive half. So from a dynamic perspective, that would be a 2 DP move from the top to bottom. Basically what that means, if you're unsure of what the DPs are, or how decision points work, and all of that fun stuff, it's akin to standard deviations in that the probability is incredibly high that we close above this zone by the end of the day. So if we do get some crazy slide down to 63.64, you better believe buyers are going to be all over that thing. We'll see if they show up, if it happens, but far away, we'll see. I don't know. That's the last interesting point. Otherwise, we're just kind of in this super tight little channel. Not really pulling back, not really doing much of anything. So crude oil's got to wait. Over on the euro did get its pullback, finally. Just the one that I was waiting for happened to do it at 3 in the morning. We were looking for that wedge bottom, that potential pickup off of the lows. It did come back. It did give the bounce. It worked out perfectly. It just did it while I was sleeping. It's one of those things, you know, like, well, okay, nothing I can do about that one. But for now, we do have a descending wedge working its way lower. We're running out of time. So maybe a breakout, pullback, something along those lines. That does create a bottom-weighted zone for the peak, which means that it is applicable to get another low, even if it does reverse higher. Something to keep in mind. Massive undertow going on so far, which, again, would be suggesting that this, not necessarily reversing, but a deeper retracement is expected. And if sellers are looking at the downside move, they've got a rotation off of L3, that's it, huh? L3 broke down into an L1. When screaming lower, they defended in the L2s. Broke down again into the L1s. They're trying to defend it in the L1s again. If it fails, deeper pullback, undertow. L2 is next. Over on the crypto side, Bitcoin just kind of dinking around the 55,000s, honestly. They're not really doing a whole lot of anything. This is the previous zone where the market got stuck for quite a while. Lots of big wicks above and below this area. So volatility, more so in the upper range, is generally expected, and we're kind of hovering inside that upper range. If it does deviate underneath this low, it does tend to slide a little bit, right? If it stays inside here, then it usually wants to go further up. If it gets underneath it, typically slides down about 1.5 deviations of the range. That would put it at about 52,000. So we'll see what they can do here, but at the moment, there's no divergences. There's nothing necessarily dictating that the market has to turn right now. So this could just be a larger correction and an overall down move, especially considering Bitcoin dominance is getting tanked on by Ethereum continuously going higher. Maybe everybody's kind of partaking in the flippening, like, oh crap, wait a minute, really? So now we have to sell all of our Bitcoin and get Ethereum now, huh? Okay. Could you imagine? That could be why, like we were talking about in the members chat and in Discord, there has not been a major swing low break on the 15-minute chart since the 24th. Not a single one. It's disgusting, but not a single one. So when there is, with this kind of incredibly bullish trend, obviously this is squeezing shorts out, going out of, like, just ripping their face off right now. But along with that, there is usually a pullback. And when the market extends away this far, that pullback usually extends a bit further as well, because buyers haven't had a chance to buy in at all, really. And the ones who are long have been long for a while or have bought, a little bit late to the game. That's effectively going to mean that nobody wants to give back their profits because there hasn't been a pullback. They don't know where the bottom could potentially be, so they start exiting. And that causes more people to exit, and that causes more people to exit. And all of a sudden, you get that 40% drop that shows up out of nowhere. Not to say that that's going to happen today, but that's kind of the issue in the fact that we haven't broken any of these swing lows. Now, the nice thing is, As long as it hasn't broken one of those swing lows, this trend can just keep squeezing higher as long as it wants. It can go all the way up to 1 million if it wants to. It doesn't matter. As long as it doesn't break any of these swings. As soon as they break some of those major swings, that's where you get this. And then all of a sudden it gets flushed. That's that fear. Realistically, buyers utilize that fear and they gobble it up, but that's what I'm waiting for right now. At the moment, this is territory where you're just holding. This is HODL, right? Hold on for dear life and just let the thing go. Speaking of HODL, then there's Doge. Sheesh. Anyway. All right. Starting off on the daily chart on the Nasdaq, switching gears over here. Don't say we didn't warn you. The deeper pullback telling us that 13,453 was going to be the point of interest at the bottom of the wedge. The options on the long side, the buyers yesterday talking about that as a major hotspot. Yup, it's still going up. So the options play and the longer term plays from yesterday are working out fantastically off of that area. Continuation to the upside, it stopped that big bear move to a T. I mean, it barely had any chance to really stop there at all before rotating back up. Now, that does not mean that this bear move is done. But what this does mean is that we are in a situation that very likely, and when we zoom in, we'll see it even better, that a lot of buyers who were buying this area had to take on very little risk. So from a reward perspective, guess what we're sitting on top of right now? We are smack on top of their 2-to-1. That's a problem. Seeing the amount of support that came in here, that 2-to-1 actual risk typically does cause a lot of difficulty. So this is going to be a spot of some pretty big contention. We've got to work our way through this 630s, 640s area. If we can get up into the 700s, then it's going to be clear, and we should be go for another leg up. But we've got some work to do yet. Narrowing in to the slightly closer picture here. Looking at this entire slide down, it's fairly obvious that if buyers were buying into this move, they were stuck up at the 13,905s. If those were sellers, well, they were rewarded pretty well. Very nice drop. Once it started dropping into this area at around the 500s, though, we can see a drastic difference in the way volume started showing up. Accumulation volume. Total difference, right? We see nothing really, kind of flatlining volume, decreasing volume. That's profit-taking volume. All of a sudden, bam! Like, whoa, wait a minute, what? Okay, well, maybe there's something here. Obviously, in the grand scheme of things, at that point, it's still lower. But that trend quickly died off when it made more lows. So we see accumulation volume down into these lows, and with that in mind, likely if buyers did buy up in the 905s, they obviously were buying a little bit more down here. Not enough to shift the POC. So if it V-bottoms and goes all the way back up, considering we haven't shifted the POC, this 905 point becomes a massive zone of interest. All of the buyers who did not have enough time down here to get an average built in a halfway decent place are still stuck with the majority of their position up at the 905s. They've got some nice ones down here. So maybe that's been able to get their average down to like here. It's not doing them much good, right? So as the market continues back up, they're going to see a lot of exiting around that 905s. The majority of their initial position, and some of this to cover the commission and add a little bit of icing on the cake. Because what's that going to do for them, right? Effectively, that means that they're going to cover the commissions and this trade will just be a scratch. Oh well, welcome to life. But adding a little bit of icing on the cake while they were building in down here, just assuming the midpoint would be the average, just throwing numbers out there, around 450, around 500-ish, then realistically, if they added a bit and took some off from that position too, then where's their average? Their average isn't here anymore. Their average is down here. Guess who's in a very healthy position at that point then? They exited everything, so their risk is off the table. And now they're in a massively profitable scenario where they can trail some stops up and lock in a little bit more. So their major objective right now, 905 or in that area, in that ballpark. If it pulls back, then, we'll see if they can build a POC down here. But for right now, this is looking like either V-bottom territory, if it goes screaming back to the upside, and if it does, 905 is the objective. If it doesn't, then we probably get stuck at the bottom for a while. Over on the 15, you can see that perpetual motion to the upside. Bears are getting nothing done. Maybe at the open, they get a little slide off. That higher low dip that we were talking about from the bigger picture, but we'll see. Over on the S&P, we're a little ways away from the open, but generally speaking, again, again, the S&P has been quite a bit stronger than its counterparts on the Nasdaq. And well, here we have a very clear, beautiful looking range-ish type move. Quick trap underneath, higher low, gone. They even got one more trap inside there. Nice, good vindictiveness. So S&P's feeling a bit spicy today. Obviously, I do not want to be a buyer way the heck up here. Would be much more preferable to see a buying a little bit further back. Last pullback was middle weighted. Breakout continuation. If we look at this last bottom weighted. It was at the exact same price too. So apparently I hit puberty again. Oh man. Nice continuation to the upside. If they're going to pull back, though, I'm not going to be interested till the 73.50s. Kind of curious. If they want to really rip that off, what's this deeper one? Ugh, top weighted. Well, that explains that trap on the lows, huh? Gotcha. All right, fair enough. Well, we can't really use that one anymore. We'll see if they want to come back. Maybe we can, but 73.50 is going to be the point of interest at the moment. Man, what a funky looking in here. Technical terms. Well, whatever. Looking at the Asian session to Euro session transition on the Nasdaq, it is bullish, and it's showing bullish continuation, so that part looks fairly good. Just got to see how they want to respond to it. Even a almost picture-perfect breakout pullback of the Asian session. And now the Euro session. They just haven't gotten a new high. Do have some potential concerns. Slight undertow building on the highs. On the faster, not the slower. Only the faster. This isn't logarithmic, is it? Okay. MACDs on logarithmic look real weird. There we go. All right, let's see if there's any other potential swings of interest. Gold back at 76.3 would definitely hold my interest if they want to pull back to that area. We've got that L4, massive bounce off L4, and a rotation back up to new highs. The thing that I like about this is even if this is going to fail breaking up to new highs, the objective is still to get back up to at least here. So from this perspective, noting that this is kind of the risk zone to the reward, that's a fairly healthy close to 2-to-1, might be a little above or a little under, give or take. So from the upside perspective, the bulls have some pretty good gumption going on here. Nice accumulation volume into that point as well. So 76 looks pretty good. We'll see what they want to do from there. As far as a risk perspective goes, there's a couple different ways to approach it. If you're trading it from the risk on perspective, then realistically your risk could potentially be all the way down underneath some of these other swings and you'd be building in. That's personally the way that I like approaching this a bit more. But that said, there are other ways you can approach this too. Noting that the accumulation volume is down to 76.3, this could potentially be a catastrophic stop point. But if we begin closing underneath this point, that's a big heads up that if it goes back in your favor, it shouldn't go back down. So there will be a lot of clues for early exits within there, with the mentality of that low being more of a catastrophic stop zone. Lots of different ways to approach it. Now, as far as crude oil goes, I mean, man, I can't really be interested on crude until it gets back at least a little ways. 65 was the last time they saw any volume, and that was still all just profit taking. Kind of curious if we flip this the other way. What's this volume look like going this way? I need the low, though. All right, well, whoa, man, really herky-jerky volume in here, huh? If they're going to pull back to anywhere, I mean, yeah, I know we have the POC at 65.70, but the next point would be down here at 64.50. That's a big zone of interest. The deeper POC is still down there at the lows. Yeah, I think I'm going to have to go for that 64. This is the one that we were talking about earlier, but I just don't see any other ones. Potentially a riskier initial position around the 64s, just underneath those lows and a defense on the initial bull bar. But 63, 64, I like more. Now that I've Dr. Seuss that. Let's go on the euro. We've got more continuation to the downside with the descending wedge, working its way lower and trying to break down. They attempted to break lower underneath the base, but failed, and that was a higher low continuation. We've got a big undertow coming off the bottom. But notably, it's also not really breaking higher. We're stuck in a wedge. So generally speaking, when the MACD, especially the slower, is stuck in a wedge, it'll give us a little bit of a heads up when it gets a break. If it continues breaking while price is still constricted, it's a clue in the direction that price is going to want to try to break out. It's never a guarantee. Nothing in the markets are. But at least it gives us a little bit of a heads up in terms of the overall direction of if it's going to want to go up or down. So far, yes, we've got the undertow, but I'm going to monitor this as a wedge. And we'll see which way they want to go. S&P zone of interest back at 73.50. Nothing yet. Outside of that, we got 928. 930 open right around the corner. 929. Somewhere in there. One of those. See if we can get a bit more continuation to the upside and get this thing rolling. Now, from the scalper's perspective, as we zoom in a little bit closer here, noting that we are bouncing off of a major zone of support on the daily, we're trying to shift gears to the upside, I want to be a buyer, etc. From the lows, that swing low that kind of kicked everything off, it is an L5 transition, which rotated into a new high. Typically, L5s want to come back to an L2. So far, it was L1, L1, L1. They finally got the dip back to L2. So if this does start showing a bit of a pullback going into the open, another bounce off of that 1150 could be really nice. Let's see what the open wants to do. Bitcoin Cash target hit. Nice job. Still appears as though the majority of the volume has been built up at the highs. Even if we look at the initial drive down, the POC's at the top. Quick little flush down to those L2s. S&P's trying to get that little dip. 73.50 is much more interesting. Bulls attempting to take over here. They are obviously hitting a bit of resistance in this volume. They were able to get above it. Bulls are really trying to get that breakout move going. Nice little snapback here. We're kind of retesting this 44 quarter volume. S&P's real close. Nasdaq bulls in the short term trying to crack the top. There they go. Bulls will be looking for more continuation to the upside as we continue to demonstrate support off that 13,453. How did it respond to it when it got there the first time around? $13,453 is right there. Kind of chopped through it, bit of resistance. Then it did its normal higher low, higher low, higher low. Game over. Okay. S&P just need a little bit more down to those 73.50s. As far as the initial volume, although we still have a minute and a half and a lot of things can change. There we go. 73.50 for an objective 74.50. Volume at the moment has built up at 75 on the S&P. Testing the target, no fill. There we go. Thank you, ES. Fantastic bounce off that volume node. You had to have your had to have your early or let me try that English again. Had to have your order there early because that was a, was it to the tick or did it go through it? No, it went through it. Never mind. I almost never get to the tick fills on the S&P. Does anybody? I don't think that exists. Sometimes. Sellers still trying to get this to drive back down again. Buyers on the Nasdaq looking to get continuation off this 44 quarter, although it's a really top-weighted POC. That's tough. I would assume buyers are probably trying to buy into this pullback. It would make sense. Why wouldn't they? It's just, it's so far up. 75 is the first 5-minute volume on the S&P. And as far as the Nasdaq goes, its first 5 is at 47. Back underneath that 44 quarter earlier. And you can see, I mean, buyers really tried to get it going off that. Sellers didn't just, it's just sellers didn't feel stuck enough. They tried. It was a nice short-term bounce, another nice short-term bounce, but back under, game over. Sellers were not impressed. Big dive back down now. We're only 5 minutes past, getting down to the Euro session. We do have a bit of those divergent tops, although it did make a new high. That doesn't necessarily qualify as a Mac whack per se, because it did make a new high. It's just all part of the same sequence. From the larger perspective, looking at the trend continuation buyers, we've got an L5 off of the lows. The next pullback was that nice L2, almost L3. And now we've got this undertow at the top telling us that the pullback could be even potentially deeper, saying that L4, L5. Maybe they actually do get the L3 this time. Either way, we've got to wait for some proof. I'm going to highlight at least the L3 first. Have to be able to see the line. The next pullback from top to bottom, we built a POC right up at 47.50. Some pretty top-weighted POCs up there. Kind of curious how they develop this area here. Almost a picture-perfect bounce off the Euro session highs. Sellers are trying to hold this down. 1775, 18s. Seems to be the zone of resistance that it's struggling around, but we've got a POC shifting down to 75 now. Accumulation volume potentially being confirmed. There they go. Short-term scalpers will be looking to play off the 1775 area. That volume dump there is absurd. Did you see the volume trading hands at 1775? Holy crap. So buyers will be buying off that, but more on the longer term perspective. And again, from the option side, man, I would still prefer some deeper prices. 1775 is looking meh. Maybe one more new low. Market trying to cut underneath this 1775 volume. How do they close this? Oh, they closed it above. Massive volume shift. I'm going to look to pick up a long in this move. Starting to get that deeper dip. There we go. Big push, get that back up into the 1775s. First objective, rejecting 1775s. Can they get back above it? Where this candle closes, super important. Underneath it, I'm out. No thanks. The first portion of that trade, as it started slipping lower, I exited for a loss. The rest of them exited back up at the top, effectively break even on the trade. Down commission in maybe like $15 or something. I don't know. 3 ticks, 4 ticks. It just didn't slide the way that I wanted it to. But now that we're breaking back above this 1875, I want it to go a little further down. The Nasdaq's such a vindictive market. Like, I really would love to see it trap underneath that 93.25 for the option side of things. But now buyers are kicking it back above the 619. Oy. Chopping under. Oh, okay. Oh, they closed it above. Look at that big wick back on the bar. Holy cow. What a fight. It's still super early, and I would like one more new low. Sellers are trying to roll underneath the low. They're still holding this POC down. Oh, geez, all in one move. Little inside snapback. Sellers will be looking to try to push back down again. The only problem that I have with trying to short too aggressively and why I like the long side more is the major support on the daily. We're just pretty far away from it. Might need to pull back first. Get a quick little dip underneath these 450s. 619 still the bottom weighted volume node that they're having some trouble on. So far, the volume from the top is accumulation, so I'm assuming that the 619 traders are buyers. They just need to get back above 619. Nice churn back above it. Very nice close back above it, too. Pretty strong bull bar sequence. There they go. Well, don't say it too fast. Jeez. All right, now they have a couple candles that are closing above it. A bit more proof, starting to break some swing highs. Good. A snap back to 19 will be the zone of interest for buyers to pick back up again now that they've been handed a bit more proof. That helps a lot. Don't lose sight of those earlier areas, though. 44 quarter. Geez, they're climbing right back up to that. Want to see a quick little flush on the Nasdaq back towards those 19s, 20s in that area. That's a really nasty bear bar off the top. Didn't actually hit 44 quarter, though. Gold hasn't quite pulled back far enough. Crude oil's 1.5 miles away. Back up to 47. That's the first 5-minute volume node. We are also retesting that previous area of volume interest at 44 quarter. That's a heck of a bear bar off the top, huh? Twin reversal at the moment. Just kidding. Popped right back up again. More continuation higher. Short-term scalpers may be looking to play off the long side on a pullback to 44 quarter if they can get it. I would still prefer that deeper one down to 19. Makes much more sense, even after it makes a new high. If once it pulls back to 19, I will be definitely interested. On the S&P, starting to challenge back up towards the volume node at 75, but the way that this is kind of holding, again, we trapped underneath the lows, higher low, quick dip, and then immediately reverses back up. I don't want to be a buyer here, but if we can get a dip back down to 69.50, I'd be interested. Higher low style. Short-term scalpers, again, have potential at around those 44 quarters. Not really getting that pop that I wanted, which might be indicative of a larger drive down towards those 19s. I'll still hold the 1, but I got to see them show up to the party here. All right, there we go. Get down to those 19s. Or maybe not. If it does just shoot higher, that's fine. The objective would be at least a 2-to-1, which would be up there at around 73.25. But it's still developing, and I don't think we have to worry about that yet. 19, and in that area is where all of the swings, the options, the et ceteras start hitting the longs, trying to get that continuation back to the upside as well. It doesn't look like we're going to get that dip back to 19. What is this mess of candles going on here? The 500 tick looks nuts. No. Stupid Windows, don't do that. I just wanted to see the news. Next news announcement. We've got the ADP, which came out earlier. 10 o'clock ISM non-manufacturing around the corner. 64.3 is the expectation there. All right, well, I didn't get a very good pushback here. I like this 40 zone to try to grab it. As far as upside objectives, still back up to at least the 666. A little ominous there. Ooh, we're getting close. $23.25. I really like this area. That's the pocket down in the 19s. Major point of interest beginning to hit here. Okay. Well, first objectives are going to be to try to pierce through the 40s. Nice continuation to the upside. That bottom sets my average way at the lows. I am okay with that. Let's let this last bugger go. Yep, we still have news at 10. Tried grabbing a secondary one, but couldn't quite get it. Where are the bulls? I'm going to jump ship on that one. That response should have been a heck of a lot stronger than what it was. Like the first time. It hit it, gone, right? It never came back. Where are they? But why aren't they showing up to the party? Ranging so far, but bearish bias. Yep, it still hasn't shifted gears. They're really trying to defend these bottom-weighted areas. I mean, you can see the fight. Look at the fight coming in at 19. It's just they're punching each other in the face, and the bulls just, they've taken one too many. Have to go back in the corner and rest up a little bit. 69.50 to 70.50 S&P objective. Target filled on the S&P. All right. See Nasdaq? See how that's done? That's what I want you to do. Simple. Just done. Nasdaq and your vindictive garbage. Jeez. 10 o'clock around the corner here in about 6 minutes. We do have big news at 10 o'clock. ISM non-manufacturing PMI. Don't forget today's Wednesday, so we have inventories as well. Crude oil inventories. Forecast is negative 2.346. Yesterday's API was negative 7.6. So that does line up pretty well with what would be expected. I love these areas, but I'm having difficulty figuring out where I should place my stop. If I'm taking a trade off of a volume node, is there a specific zone of interest that stops usually go to? If there is a spot that stops usually go to, the Nasdaq will find it. I promise you that much. As far as logical points of interest from a stop perspective, don't put too much thought into it. When I'm looking at stop locations, or I'm looking at, break points, if I'm not going to use a stop and I'm building in, or whatever the perspective happens to be, generally you just classify the trade ahead of time. I want to see something specific happen, right? So as an example, when we were moving into this area and the market began climbing back up, right here, what I wanted to see would that big slide down, nice move up, quick higher low juke, and a move up. Technically, it did do that. It just did it in a totally different way. So although my initial stop could have potentially been underneath this swing low, right? That would have been a pretty big zone of interest, just again, visually obvious. Once we start doing something that I did not want it to do, it doesn't make sense to hold on that long, right? If you would have, in hindsight, it would have worked, but is it worth that risk? Especially on the full side, on the mini? That can get real expensive real quick. I just wasn't comfortable taking that much of a risk on it, so. As far as stop stuff goes, though, usually it's really easy. Zoom out. If it's obvious, that's where the stop should go. Because generally speaking, if you're wrong, you'll have plenty of red lights ahead of time that should be telling you to get out. Unless it's the Nasdaq. 1 second on the Nasdaq is all that thing needs to tell you you're wrong, and by that point, it's at your stop. Oh, 100% agree with you, Steve. 100% agree with you. It's hard to use stops in the first hour or so. Definitely. At least the first 15 minutes, good luck. The first 30, okay, but yeah, the first hour, man, it's tough, especially in a market like the Nasdaq, because it's such a vindictive SOB of a market. I mean, it will hunt your stop. And it's not personal. It's not because it's your stop. The market's gunning for you. It's that everybody put their stop there, right? So it's hunting everybody. Remember, when you're talking about industrial money funds, etc., they can't just drop a market order of 1,000 contracts. It doesn't work that way. They have to slowly build their way into positions. And what better way to do it on a stop run? Those are the ones where it's a very obvious point where you'd expect to see a stop and it goes boop, and V bottoms out of there. That's an accumulated stop run. That's where JP said, thank you. I'll take those. You don't know it's going to happen, ahead of time, but usually volume is a pretty big clue. Technically, this is all still part of this pullback, so we can go to this next one. We've got a low-weighted volume to average at around 13,618. Again, accumulation volume down to this point. And they're not really doing a whole lot under here yet. Now we're narrowing into the L3. We're starting to get into that deeper pullback territory. Look at the volume that just stepped up. It's just a brick. So buyers are interested. This is the pullback where, from an options perspective, at least on the light side, maybe not full size, just because a deeper pullback would be even better. But buyers will be trying to pick away at this area for a rotation back up to at least 647. So I think this is a zone of interest for options. And I had a comment yesterday, or a private message, saying I should highlight the areas where I'm talking about options, just so we can go back and look at them. So this is the area here. I'll just color code it green. That way, if we have to go back, or you guys want me to look at a specific one, just tell me box 3 on the bulls or whatever, and then I'll know. I'm not going to actively update them and stuff like that. Those are just zones of interest where I've talked about them, just so that you can look back in the hindsight. I mean, you got to manage them however you want to manage them, but for me, from an options perspective, and the reason why I was saying early is because even on, like, if you went to a 125 tick, like, super fast, it hasn't even put in a higher high, higher low. Like, it's very early. Very, very early. Doesn't mean it can't work. It's just, usually if you're early to the party, it either works immediately or the seats get expensive. Market continuing to slide down, a little bit problematic considering that the 13,647 first 5 volume node is at the top, essentially demonstrating that the highs were totally failed. If we look at it from a bigger perspective on maybe the 60-minute, is there anything from prior that could be useful? What about this giant move down? $10 news. Let's see on this most recent leg. Where was the... No, Ziggy. Oh, cat, you're killing me. Last couple days. Oh, man. No, 1275. Man, now put this into perspective, okay? Really put this into perspective, because this is the volume on the way down. Okay, this is not the volume on the way up. This is the volume on the way down. Buyers very likely accumulated into that first pullback, and they got dumpstered. That was their stop right there, that VVP. Then built in a little bit more, so much so that they had an average right around 1275. But what did they do with that average? Right? They didn't utilize that as a major target. They started, couldn't go, started, couldn't really go, tried again, couldn't go. Exit a break even, exit a break even, new low, exit more a break even, exit a break even. Finally goes above it. Where do you think it's going to bounce when it pulls back? Right there. 13,200s to 1275 specifically. And you can see, if we are looking at it after that point, it's all profit taking. We didn't see an accumulation shift or a volume shift until, let's see, how long did it take them? All right, is there a way that I can make this go faster than what it is right now? Thank you. All right, POC is still stuck. Now, remember where that POC is. All right, that POC is right there. That's their break-even point. After it's already been proven to them that they're wrong. So the market gets back up into that. POC stays there. POC drops as soon as it starts coming back down to the lows. Now we have a higher low, not over here yet. We have a higher low. POC is even further bottom weighted. Look what they're doing. They exited the majority of their position at break even, and now they're bottom building again. They're drawing their average down. Now their average is here. All right. We go to the next low. POC kind of stayed put. Really didn't do much after that. You can see they kind of fought over it a little bit, and then aggressively broke higher. So if the market is going to pull back on a deep dip and it's going to break through the 13,200 zone, then that's going to be the next one. 12,209 or 5,959. Jeez. Starting to get the deeper pullback. Have we gotten to the L4 yet? Once we start hitting L4s, that's when the major swings. Yeah, there we go. Now, this is where the swing perspective on the other options are going to start coming in from the longs. Now, remember, the same thing can be said here. We have not seen a trade. We haven't even seen a higher high yet. We've got a little bit of time. It's still super early. The other concern, there's nothing saying that the market needs to reverse right now. There's no undertow. There's no divergence. There's nothing. 41.6350 was the volume node from yesterday, and the S&P is getting pretty close to it. Small little wedge forming down here. Over on the swing side of things, nothing on gold. Nasdaq, you can see the major zone of interest now that we've kind of chopped through everything. A little further down. It's that inside retest back in the 500s, which kind of clears the way for shorts to take over. There have been zones of interest on the way down, but there hasn't even been a higher low. Like, no transitional phasing whatsoever. We tagged some big volume inside there in the 55s. Here we can see. If they were shorts, they're profit taking right now. Back to the lows of the range. S&P, did it fill settlement? 56. 56 quarter. Wow. It missed the gap by a tick. We have not broken a new low yet, but if it does break a new low, that's game over for the bulls. They are no longer looking to make money in that case. They are looking to basically, or typically, average down so they can get out at break even when it pops back up. Now it starts to slow down just a bit. Oh my God, that scared the crap out of me. I hate that when you have a tab open that you forgot about, and when you click it, it reloads it and starts playing it. Jeez, oh Pete. Still nothing really demonstrating that the buyer should take over yet. And here it sits. Big VVP in the middle. Broke through that area very aggressively. 13,560 put in one heck of a volume node there. You see that big brick of volume sitting there? Jeez. All right, see if the market wants to push back up towards those 560s. There's obviously a lot of volume there. We haven't broken a new low, holding the Euro session lows. Crude oil inventories around the corner at 10:30. Sellers continuing to dominate the market to the downside. Trying to keep an eye on the euro, but it's just not doing anything. Crypto pulling back a little bit. We've got a higher low and a pretty strong bull bar. No POC shift or anything, but there are some pretty wild volume nodes inside there. Sellers will be looking to utilize that one at 560. From a scalping perspective, at least. Got to see him try to get back up into the 60s, though. It's getting a bit later in the day as well. It's almost a perfect wedge that's forming here. Is the Nasdaq 500 tick a head and shoulders pattern at the top? If so, what would that mean for the market direction? So typically a head and shoulders pattern is nothing more than a continuation pattern, but in the bigger picture. Hang on one second here. 59.50 is going to be a zone of interest for sellers to try to push back. Mostly on the scalp side, but we'll see how strong the rejection is. So effectively what that means from that scenario is that it just means there's a deeper correction likely. So down for the moment. And typically they move in tandem of 100% and 200% moves. So you would measure, I like measuring from the highest and lowest shoulder. So hang on one second here. If you were looking at this as a point of interest from the head and shoulders, you've got the left, the head, the right, and we have an up-angled neckline. I like that. That's good. So I would measure off of the narrow one from top to neckline and go down. Typically 200% I find to be a little bit more beneficial. That's down to 81.50. Scalpers' objectives off in this zone, looking for secondary portions if they want to keep this going. Nasdaq demonstrating a bit of kind of choppy meh going on in here. Good fight so far off of 60.75. Looking for sellers to try to drive back down towards, I mean, at least down towards the 545s, but honestly, the settlement gap fill looks really nice. They're just trying to mess around with this area at the moment. Come on, Nasdaq. Slide that bad boy down in the 40s. Maybe even the 30s. Come on. Little more, Nasdaq. Little more. Nice. Beautiful, quick little pop down. I guess it didn't go as far as I wanted it to. It was 49s. I was looking more, I guess, towards the lower 40s, but quick little jerk underneath there. Anyway, so when I'm looking at a head and shoulders pattern, I look at it in a couple different ways. You've got the initial head and shoulders pattern, which I actually, now that I think about it, I think I've got a video on YouTube somewhere in the playlist going over them. But I look at them as continuation patterns, looking for a deeper pullback. Kind of like an undertow. Doesn't necessarily mean it's the end of a trend. It just means to expect something to change or to be slightly deeper. This would tell me the same thing. So I like looking at it from the here, 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 and here. That's the head and shoulders. Typically, when I'm doing it, I prefer to see it where the neckline is like this, where if it's breaking down, you have an upsloping neckline. If it's breaking up, you have a downsloping neckline. And what I'll utilize is the measurement off of the head down to the highest shoulder, and then deviate that down, not once, that would be the first objective, but twice. And at the second time is where buyers typically start coming in, and that's where I would like to see reversal plays, sideways action, stuff like that, because the anticipation of the head and shoulders pattern is to roll all the way back up to the highs. That's how I like to play them, at least. All right. Not really a whole lot going on. You can see sellers tried getting it going, but so far, no dice. Look at these spikes in volume. These are nuts. This one's going to take the POC over. Still has a ways to go, but man, oh man, what a wild move. All right, well, we are going into 1020, 1030. I'm still going to keep my eyes open for potential scalping setups because there are plenty of them, but this is the sellers are losing their grip in a pretty bad way here. They've got to show up to the party or they're going to start giving up. Pretty solid today. 2 scalps on the S&P and a few scalps here and there on the Nasdaq. Nothing really got running, but better than nothing, I guess. Sellers breaking back down this most recent area of interest. Not shy about that breakaway move either off those 560s. Remember, that was the first of the big volume spikes. Sellers will be looking for another rejection off of those 60s. Again, I have a really hard time wanting to be short here when we're plotting higher lows and higher highs. Noting the daily, we're at the bottom of the wedge, bottom of the massive support. This is where swings are going long. Preferably even further down, really, but all right, sellers gaining strength, looking for a continuation move on this, at least back down to a new low. Back down towards the 53s-ish? 45s. Here we go into these dojis again. More sell side potential. Lower highs across the board. They just need that good oomph. Bear bar for potential continuation. I'm going to reduce a bit just on the way that it's playing ball here. Yep, that was definitely a good call. This first balance point up in the 580s would be a much better zone of interest. Now that sellers have been proven that they've got some issues, the next pullback, especially if we can get that lower low, I would still really love to see them trap this base at around the 45s. I just don't know if they're going to be able to do that or not. This next push down will be the sellers looking for continuation, and if they stall, that'll be a really big clue. All right, I'm out. I don't know if you saw it there. It happened incredibly quick, but as soon as they hit that break-even point, the first time they hit it, it stopped dead in its tracks, just for a second. But that's enough for me to realize, wait a minute, so, something's wrong. I'm gonna exit a little bit. That's why my first exit was there. When it slid down, that's why I exited the other one a little bit faster. I've already been proven wrong on the trade. My job isn't to try to do anything but mitigate loss. Bulls are still trying to take back over. From the swing perspective, this is a fantastic zone. It's the first time, though, that we've actually had a higher high or anything. No divergence. I mean, they got that. On the swing side, still nothing. Waiting for gold to pull back, 76.3. Crude oil, I'm sure it'll pull back at some point. Ooh, now sellers are putting on some heat underneath these 560s. The POC has shifted down. So if the market does go up, there's no need for it to stop anymore up at those highs like we were talking about before. Jeez. They just had to get everyone out first, that's all. Oy. All right, feel free to get those last questions in. We'll cover those, and then we'll wrap it up. back down to a barely, but a new low. I'm kind of curious to see what happens when they go to a bearish day today. Today was a bullish day, so if they shift back to bearish, that to me would be the point where it's at its cheapest. You know what I mean? When we've had a bull day that goes bearish, that's pullback. At least if buyers are looking for continuation up. Now, the sellers have proven their intentions, and we do know that there is still potentially more downside. So when we start popping back up into these 57s, 58s, near these 60s, I would assume that a lot of buyers who are trying to build in are going to start jumping ship around those. Especially given all those volume spikes we had down there. That's where sellers will be going to look for that continuation back to the downside. First scalper's objective isn't going to be too far away, really. That big volume node was down in the 50-50s. Scalper's objectives off. Continuation flush. Nope. All right, I'm out. It's getting late in the day. They're fighting over it. I'm not going to give it a chance to take anything back. I'm going to call it there for me. I'd rather end on a positive note. What actually makes the markets create trend channels? Great question. You, me, HFTs, everybody. It's a self-fulfilling prophecy. Generally, the majority of price action these days comes from, or the majority of volume these days, comes from HFTs and algos. So if you were to look at it from that perspective, I guess technically it would be probably that more than anything else. But they've got to get programmed by somebody, right? It's all based on the same stuff. When you're coming in, and that's why I like using multiple levels, right? When you've got let's say a channel, a bullish channel coming on the hourly. Okay, well, that means that you're going to have hourly buyers who are going to be looking to do something in or around that area, right? Now, whether or not they respond, we won't know until it gets there. We have to wait until they actually respond for proof. But if we can go into a faster time frame and realize that this is also the completion of a wedge and they've just broken out of it, breakout pullback style, okay, well, now we've got two things. Now we've got a wedge breakout pullback buyer who's looking to do something there. We've got 60-minute channel buyers who are looking to do something here. And now, let's say on the 15-minute chart, we also have a volume cluster there. Now you've got volume defending it on another time frame. You have all these different time frames looking to do something at the same spot, regardless of the reason. But that's where you get all of these different structures from. And remember, it's a visual thing too. It's I can draw a wedge and you can draw a wedge and they'll look totally different. Sometimes they'll look the same, sometimes they won't. It's all up to perception, really. But what it comes down to is seeing or demonstrating an area of interest, like a channel or a trend line or something like that. And once the market reaches that area, was there a strong enough response? If there was a strong enough response, then it's being defended, or at least they're trying to. You don't know if they're going to be successful until they're successful, right? But at least you can see they're trying to. Usually you'll see it in volume, that kind of stuff. There's clues. But what makes the channels and all of that? You, me, everybody else. If you're trading, you're making them. Kind of weird to think about, but all right. Well, I'm not seeing any other questions coming in, so that's going to do it for today. Overall, it was an okay day. A little bit choppy, a little bit sloppy, which I think is fair considering it went new high, new low, new high, new low, new high. That kind of happens, but I managed it fairly well, I think, all things considered. Hopefully you had a good day as well. Currently, the Nasdaq appears to be trying to bottom weight this POC, and they're looking to try to accumulate this low. We already know that. This is a daily major point of interest. This is where options, where long-term traders are going to be buying down here, holding for as long as they possibly can, hopefully into tomorrow, and see if they can get it to go back up to the top of L1 on the daily. We'll see. Otherwise, though, enjoy the rest of the day. Rest up, and I will see you all back tomorrow morning, right? Have a good one. We'll talk to y'all later. Thanks.